Anyway, folks, let's get started. Well, thank you very much again to the fine folks at Epic Street for making this event possible. Actually, really enjoy doing these events. Not only does it give me an opportunity to share some thoughts with traders around the world, and even the folks at Epic Street, but it's a good review for me as well. It's a good review for me of the trading day, and it gives me a look ahead as well. I mean, I'm having to go through the process of thinking about and again covering again what happened today and looking ahead at the next day, and it helps me continue to remember and absorb this stuff. Remember things like what was the topic du jour, what drove the markets, and the key technical levels on certain pairs. I mean, the more I discuss this stuff, be it in webinars like this or my trade journal or what have you, the more I remember this stuff. And so I hope in the process of me helping myself remember some of these things through these webinars, that it can help some of you as well, at least look into the mind of a trader/quant, which I've been labeled at Epic Bootcamp. Anyway, let's get started here. First, a bit of a disclaimer. I'm not going to provide any specific trade alerts. The purpose of this event is education. We're not going to provide specific trade recommendations. We will take a look back. Wow, the 10-year Tino, the 2.32%. We will take a look back at the day behind us and take a look ahead at what tomorrow just might bring. Who is shocked? And that's okay, folks. If there's no right or wrong answer here, so I'm not gonna beat down the folks who give the wrong answer or give too much praise. Maybe a little bit, but too much. I'm not gonna give too much praise to the folks who give what I see as, I guess, the right answer. It's subjective, I admit. So maybe there's no right or wrong answer, but who is shocked? Who is just dumbfounded? Just can't believe it's shocked by the strength of today's move, and on the Euro USD especially, but even in broad financial markets. I mean, just multiple financial markets, other pairs, European equities, for example. Who's just flat out shocked, but can't believe how big these moves are? I bet someone is. Ken's electrified. That's a good word. I like that. You know what? I'm going to write that one down. I'm going to use that word tomorrow in my live coaching session at Epic Bootcamp. Electrified. I haven't used that word in context in a long time. It's going to be my word of the day tomorrow. Electrified. Yeah. So a few of you are surprised. Now let me say this: was I expecting this? Sure, I sure will, Maud. I saw the email. I just haven't replied to it, but I did see the email he sent out. Thank you for sending that. So, again, I want to clarify. Did I expect that, in advance that the euro would move as much as it did? Did I predict, a 300 plus, maybe, what's it been today? Not quite 400 pips, but it's a big day. Would I've expected the euro would be visiting 1.42? I mean, I didn't predict that. I didn't say it's going to. Now, what I've said that the conditions for that are possible? Absolutely possible. I don't know how I said it or when I said it, but I know I said it. Something to the effect, I thought I said it in yesterday's webinar, maybe Tuesday's webinar here at Epic Street. I know I said it at least once, maybe 2, 3, 4 times, multiple times at Epic's Bootcamp. I know last week and even especially this week. I thought this week was going to be an historic week for the Eurozone and specifically the Euro. An historic week. Not to imply that everything in Europe is solved. That's not what I'm implying at all. But I thought at the very least this could be a relatively historic week for the Euro. So the conditions were right for that. Now let's I'm trying to debate where to start here. You know what? I'm going to start with something I've discussed a few times at these webinars over the past several weeks. If you've been if you did attend my webinars over the past several weeks, you might recall seeing something like this. If not, then this is a good place to start. Here's one of the places. Here's one of the sources of data that I look to. One of the sources of data that I look to get a sense of when a big move is possible. Actually, I should post the question. Anyone guess where would I look to for data on sentiment for or against a currency? Where can I get a gauge of sentiment for or against a particular currency? forums. That's an interesting idea. I actually hadn't thought seriously about that, but it's not about it. Thank you, Justin. Justin gets it. Yeah, actually, Tiger's got another good one too, the TV media. I do use the media for that purpose, absolutely. And believe me, there's plenty of times when the media is talking up this or talking up that or talking down this or that. I'm thinking, that just sounds so wrong. And I know some other traders and even a currency coach or two at FX Bootcamp who choose to ignore such things. And the way I look at it, that's data. That is information. That's information that I can use. I want to know when the market's either overly bullish on something, whatever it is, whether it's a currency, stock, bond markets, whatever, or overly bearish. And those kinds of measures can be contrarian indicators. Contrarian indicators, given the combination of a market that's, say, let's use the context of the euro, given the combination of a market that's extremely bearish on something, and then you get a dose of new information, news, that's just the opposite, not at least a lot less bearish, at least moderately good news. You talk about short covering. That's very possible. So let's look at I'm going to show you a graphic, commitment of traders. So Justin mentioned it's a commitment of traders report. I've got a link to a zip file from the CFTC's website. And if you want to know the source of the data you're seeing here, I'll provide the source. The zip file contains I'm not going to upload the zip file on HawkCom. I'm going to give you a link to the zip file posted on the CFTC's website. So the file from the spreadsheet from which I've derived this data is in that file. Let me post that now. So there's the file from which I got the data you see now. So this is a look at the relative positioning in the futures and options market of so-called non-commercial accounts. This is a proxy for hedge funds. Not perfect, never is, but this is a sort of proxy for how hedge funds are positioned for or against bullish or bearish on the euro. The green shaded area, when we have these blue bars represent the number of net long or net short positions. So if you look at that spreadsheet, if you were to download a spreadsheet from the CFTC, open the spreadsheet, look at the so-called non-commercial positions, the contracts that are the bull contracts and the long positions and short positions. You simply take the difference. So, for example, lately, what we've seen here is that there have been far more shorts among so-called non-commercial accounts. Again, a proxy for hedge funds. There's been far more shorts than longs, to the tune of about nearly 80,000 contracts. Far more shorts than longs. So again, this sets the stage. This sets the stage for when and if we get some developments, some news which is perceived to be euro bullish enough, you can get what traders like to call a short squeeze. A short squeeze. I'm sure some of you have heard that term before. A short squeeze, and I would say a great part of today's move was just that, a short squeeze. Short squeeze on the euro. And yeah, I kept it simple. I'm just looking at non-commercial positioning. Haley mentions, small specs and commercial longs and such. But I found that from a correlation perspective, if you look at the non-commercial positioning, net long and net short versus the Euro USD price action, pretty strong correlation there. I haven't checked the latest. Last time I checked, this was when was this? Actually, I may have it on a spreadsheet that I just showed you a graphic from a spreadsheet. I may have it in a spreadsheet somewhere. The last time I checked the correlation, I'm going to check the figures now. I believe it was something like 80%, 85% correlation. Pretty significant correlation between, again, the positioning for non-commercial accounts versus the price, the closing price each week for the Euro USD currency pair. So yeah, that's what's happened today. Well, let's. I'm actually going to take a bit of a different tack. Not that I never talk about this session, but Asian session, folks. Actually, let me go back before that. For those of you who weren't here yesterday, what we talked about a relatively big move. I've got a lot of Euro charts lined up here, so let me open another one. I've got some Euro charts lined up in the background to talk about some of the specific trades that came together. during today's Asian and then early New York morning session. Well, I'm going to switch this one to this chart to a euro, and I'm going to back up this chart to show you price action yesterday. There we go. Here's I'm going to go about right there. That's the move. That's actually, maybe back up a little more. So there you see pretty much all of yesterday's price action on the 15-minute chart. For those of you who missed our webinar yesterday, or maybe you haven't caught any of the news from yesterday and what drove the market, this was the response. The big sell-off, that was the response to the Euro USD, to news which hit the market a little after 9:30 a.m. New York time during the New York morning session yesterday. What happened was there were reports from the media that talks or negotiations between Eurozone leaders and representatives of the big banks which hold Greek bonds, banks, investment banks, for example, bought all kinds of Greek bonds and other sovereign bonds over the course of especially the prior decade. Representatives of those Greek bondholders have been in negotiations with Eurozone leaders to discuss what degree of so-called haircut they would accept. In other words, what kind of a write-down would they be willing to make? What kind of voluntary write-down would they be willing to make on Greek bonds? Well, those talks, those negotiations were deadlocked, or reported to be deadlocked, a few minutes after 9:30 a.m. New York time. In fact, one European official who went unnamed went as far as to say that the bondholders may be forced in a position where they take an involuntary haircut. Now, for those of you who don't know what that means, let's just put it this way: these bondholders, at least they should have, and many of them should have acquired some sort of insurance against a default by Greece. That insurance, the insurance in the bond market is labeled, has been defined as a credit default swap. These credit default swaps are issued by other banks or big banks. And, if we had a situation where there was a so-called credit event, involuntary haircut, some sort of default, if it's an event that would trigger the credit default swaps, that would trigger payments by the providers of this insurance against bond defaults, that could trigger a pretty major event in the financial markets, pretty major event in the banking systems, not just in Europe, for example, but I recall many of a significant number of the issues of credit default swaps are based in the U.S. So that's what spooked the market yesterday, the prospect of an involuntary haircut or write down on Greek bonds, which could trigger a credit event, triggering credit default swap payments and the ripple effect throughout the global, especially the developed world banking systems. So euro sells off. Well, then we get some news during today's early part of today's Asian session. Some of you may recall we were talking about this schedule of events yesterday during this webinar about 24 hours ago. And correct me if I'm wrong, we were talking about how the European leaders were scheduled to begin talks. They had like a dinner meeting about 24 hours ago now, and then we're going to have some talks afterwards. Now, the original schedule called for a statement as soon as 4 p.m. New York time. But I recall saying in this webinar yesterday that I forget how I said it, but I think it said something to the effect of, what are the probabilities that with so many people involved, you're talking about representatives from 17 Eurozone countries, probably some other officials there as well of different kinds, and representatives of these banks holding Greek bonds. All these people, trying to arrive at some sort of deal, some sort of agreement. That's probably going to drag on longer than we think. In fact, as I recall, there's some history of European leaders meeting late in the evening hours before some agreement gets done or some deal gets done. So in that context, it should not be surprising that it took a while, longer than, say, 4 p.m. or 5 p.m. New York time, for something to emerge out of those discussions in Brussels. Anyway, let me go to the. Here's what you take away from yesterday's price action. That was a sizable move on the euro. It wasn't quite a 200 pip drop, but let's look at it from top to bottom. About 39.75 for a top. 37.38 for about 1.38 for the bottom. So you do the math there, about 170, 180 pip drop down on really just a stall in negotiations with regards to the Greek haircut level. Now, it didn't say the negotiations were off. It didn't say that this was it wasn't going to happen. It didn't say a deal was going to be done. It was a reaction to simply a stall in negotiations. But my point is this. This was an issue, right or wrong, that the market deemed to be important. Must have been somewhat important, at least, or you wouldn't have seen such a strong reaction in the market yesterday. So given that, the strength of the reaction in response to just a sort of deadlock in the negotiations between Greek bondholders and European officials, that had to be top of mind for at least some of you. It had to be top of mind for smart money in terms of, okay, first of all, is that issue going to be resolved, and if so, what could it mean to the currency market, specifically the Euro USD? So let's go from there to another chart. Let me put this back on pound dollar and bring this chart back to size. Now we're going to talk about the first opportunity for a trade on the euro. This was during the Asian session. I get the right chart here. I got a couple of charts lined up. This is it. This is the one. Yeah, Tiger, I agree. It was a great buying opportunity. Tiger, my New York session video review for yesterday talks about the reasons justifying the profit target about 1.38, and it was a gutsy trade to take, but there was reason to actually it was a more conservative trade, believe it or not, just before I started my webinar yesterday around 38.25. Anyway, so here's what I'm showing now. You should see a 5-minute chart without indicators. Now, let me take it. Who the heck deals with a 5-minute chart? Well, I try to steer clear for the most part of short-term charts like this. I don't spend a lot of time staring at charts like this, but I do use shorter-term charts like this, a 5-minute chart, maybe a 3-minute chart, simply for identification of intraday levels of support and resistance. I find I can fine-tune a little bit horizontal support and resistance, or even trend lines, especially just based on price action over the course of, say, several hours. I can fine-tune levels of support and resistance, or fine-tune where my line should be, looking at the shorter-term time frame like this. Now, I'm not saying you can't identify such things on a 15-minute hourly chart. I just find some inspection of a short time frame helpful. So here's what I'm showing. I'm showing price action from about the end of my webinar yesterday here at Epic Street. So we're talking about from roughly 2 p.m. New York time yesterday to about 9:30 p.m. New York time yesterday. So I'm showing about 7.5 hours worth of price action starting soon after the end of my webinar yesterday here at Epic Street. Again, this is Euro USD currency pair 5-minute chart. Look on the right-hand side of this chart. That 5-minute candle, let me pinpoint that candle starts right at about 139, close to it, and tops out at about 39.54.55. That 5-minute candle, that jump up, that was the response to a report minutes after, was it something like 9:15 p.m. New York time, a report that a deal had been agreed to or was about to be agreed to, a deal regarding that so-called Greek bond haircut, the same deal that was deadlocked the day before, or actually the same day my time, but the deal that was deadlocked during the prior New York morning session. That deal reportedly at that time had been resolved, and there was talk about a 50% haircut that was agreed to between Greek bondholders and European officials, and the euro jumps. So what do you do with that? Well, if you watch my New York session video review for yesterday, I talked about I think it was October 17th was the day. I may be a day or two off, but look in your charts. There's an October 17th high. I'm pretty sure that's the date. You can look at your daily chart. The October 17th high, somewhere between 39.10 and 39.15. So that level's been important. I talked in my New York session video review yesterday. That, by the way, this review is posted on Epic on the Forex Street blog. If you look at price action during the Asian and London sessions yesterday, it seems that at times, and you can see that my charts on the New York session video review there for yesterday, it seems that many times the 39, 10 to 15 zone was important. So you have some evidence that this 39, 15 area has been important. Was important yesterday, was important earlier this month. And now look at price action over the hours during the New York afternoon session and in early Asian session trading. So in the New York afternoon yesterday, early Asian session trading earlier today, you had this 39, 15 to 20 area as a sort of ceiling for the euro. And again, it seemed to be sort of a floor for the euro during yesterday's Asian and London sessions. Now you have some news which has sparked a rise above this sort of ceiling for the euro. Well, who has ever heard of the phenomenon of role reversal? R-O-L-E reversal. It's worth typing in the room. Role reversal. One example of role reversal: what was resistance becomes support. Not perfect, doesn't happen every time, but it happens often enough. What was resistance becomes support. So look on the right-hand side of this chart. You can just make out the last candle on the right-hand side of this chart. The bottom of that candle tests that 39, 15 to 20 zone. That, my friends, was your entry to go long on the euro during today's Asian session. And the rest, as they say, is history. Yep, old resistance becomes new support. Folks, this happens a lot on the Euro-USD. I mean, levels that, I can't emphasize enough that it behooves all of you to have a chart like some of the charts you've seen on my platform here, and I have this chart on other platforms as well. Most of you should have some charts with lines just all over it. Because I'm telling you, folks, whether it's horizontal support or resistance or whether it's trend lines, these lines do have memory, and it's kind of a funny way to remind myself that such levels can come into play at different days at different times. But my point is this: I've seen enough charts from enough traders and of enough places around the world to know that there's plenty of traders that keep lines in their charts that know that a certain level, a certain area, in this case, 39, 15 to 20, that they defined at one day, one time, support or resistance there. And when we get a new day, maybe it's the next day, maybe it's a week later, maybe it's a month later, when that same level comes into play again. I mean, traders remember that. Traders keep such lines in their charts, and if price action confirms that the level's important again, then traders trade according to that, create trade plans based on that, or create exit plans for prior trades based on that. So again, that was the trade. Just a simple role reversal. What was resistance becomes support play, and the key for that trade went beyond the entry was giving it a chance, giving it time, giving it room to run. Again, based on what I just showed you a little while ago, we talked about the Commitment Traders Report, how relatively overloaded on euro bear positions the market has been, specifically hedge funds. So what we're facing is a scenario where something the market reacted to yesterday that was a fairly large, a sizable reaction is something that was only a brief, seemingly a brief, not lag, what's the word I'm looking for? A snag. A brief snag in negotiations was accounted yesterday. And now we got news, or in the early part of today's Asian session, that this thing's been resolved, and that and what we also know is that this goes back to late July and even last year, in May and June of last year. Right or wrong, whether you like it or not, whether I like it or not, no matter how bearish you think the euro should be, how low you think the euro should be against the dollar, the market has chosen time and time again to reward steps taken by European officials towards at least improving the situation in Europe, regardless of how big or small those steps are. So the combination of market history, the euro's history in response to moves made by Eurozone officials, at least they're making some progress. I don't think it's enough, but some progress. A an overly bearish market based on the commitment to traders report, that set the stage in my mind for a sizable move today. Let's talk real quick about the an entry during the New York morning session, and I'm going to gloss over entries during the London session, but there were a couple. Now I got to find the chart that I had set up for this. Set up a chart for the euro. Here it is. Haley asks, is there a mechanical reason for, Haley, it's just the way so many different financial markets work. It's probably one of those stupid human tricks. I mean, it works because that's what traders like to do. Enough traders trade those patterns. So you should see another 5-minute chart. This shows price action. Let me get my time straight here. This shows price action from about 1:30 a.m. New York time through, get my times right, about 8:30 New York time. So from 1:30 a.m. New York time to about 8:30 a.m. New York time. This includes price action. This includes the immediate euro response to the release of a couple of U.S. economic reports earlier today, the weekly jobless claims, and more importantly, the U.S. GDP, third quarter GDP report, the advanced estimate for third quarter GDP. And here's what we had today. The euro was dealing with a weekly M4 pivot point represented by a horizontal maroon-colored line in the middle of this chart. You can see how the euro topped out a couple of times, once right around London Open. It was just like minutes after London Open, the euro reached that weekly M4 pivot point, turned south, and the euro tested it again at about 7 a.m. New York time, and then turned south a little bit. Then eventually, before the U.S. news came out, the euro broke above that. Now, I admit, I am not crazy about these kinds of trades. But we had a modest at best rise above those prior highs for the day, a modest at best rise above the weekly M4 pivot point. The highs for the day up to that time was at 40.37. We got to about 45. I do not like doing such things under normal circumstances. However, I consider this day to be an exceptional day because, again, of all the conditions I mentioned earlier, how the euro historically has made big moves in response to some significant policy moves in Europe. If you don't understand where I'm getting that information, where I'm deriving that that pattern from, look at the Euro USD. Look at the daily candle for July 21st on the Euro USD. Again, July 21st daily candle Euro USD. That was the summit in Brussels, the last summit in Brussels, at which European leaders announced another Greek bailout and plans to expand the capabilities of the EFSF, that's the rescue fund in Europe. And the euro jumped that day as well. But the long here was actually a similar scenario to what I just discussed earlier on the other 5-minute chart, the long setup during today's Asian session. Now, what I didn't like about this setup as well is you didn't have it as significant of a break above perspective resistance here. There was a modest break at best above resistance. I've seen too many times when this turns out to be a head fake and the euro turns right back below the weekly M4 and heads south. So that, and of course, also another source of risk there. You're talking about taking a trade very soon minutes before the release of U.S. news. And what I discussed during my live coaching session in this case was that what if the GDP number had come in a little lower than expected? We could have seen a scenario where the euro drops. We see at least a brief dose of risk-off mood. The dollar gains strength, the euro USD drops, and that could have set up a long, but at a much different level. Maybe we get maybe the euro drops back to that area I've highlighted with the horizontal green line there. You see this? We had the euro found a sort of a temporary ceiling near the right middle of the chart. Then we broke above that, tested the M4 again, Then that what was a ceiling just above 1.41. I'm sorry. What was a ceiling just above 1.4017 became a floor. So my point is this: the euro could have dropped in response to even moderately worse than expected GDP report, found support at say 40.15, 40.20, and then turned north. That could have been the next buying opportunity. And if you'd taken the long, if you take the long around 40.35 or 40.40 whatever just before news, and the market turned against you, and that one was smart. That one was smart a little bit. So it wasn't the best of setups. I'm not a big fan of doing that, but there's at least some logic to doing so. I just didn't like the scenario that's there nearly as well as the buying opportunity during today's Asian session. And if you're going to argue with me about I don't trade Asian session, you know what? I'll say this: this was a day when unless you have certain life obligations or a major schedule conflict, something you had to do, then this was a day I believe you should. If you're a professional trader, you should have stayed up for today's Asian session. You should have stayed up until some news came out of Europe. This was totally dated for doing that. And I believe you know the rest of the story from there. And unless you took the long from the Asian session, or maybe there's one or two longs or so during today's London session, the real battle here was, especially if you were thinking about a counter trend short, the real battle here was staying out of the way. Whether you were long and letting the trade run, and of course the challenge there was mentally staying out of the way and giving it room and time to run. Or if you're looking for that counter trend scalp short, you got to recognize if the news is significant enough, and in this case, prospective short squeeze, the market, again, we know from the Commitment of Trades report that the market has been heavily bearish on the euro. Potential totally there, folks, for the euro just to keep rising longer than you think. We had this debate during our New York morning session. The chief currency coach, Will McDonald, was talking about charts and referring to indicators and such. And, I admit I differ from a lot of the other currency coaches at FX Bootcamp in many regards. And one of those, and not to say I'm always right, I'm wrong plenty times. But one of the things that I take with a different perspective, as opposed to the purely technical trader, is this. I find indicators like oscillators, stochastics, for example, much less effective when the market is making an unusually strong move in response to significant news. Now, somebody may ask the question, well, how do you know? Well, that's going to come from any move with time. That comes with time. You got to develop over time some appreciation for, what news events are more important than others. And it's still a guessing game to some degree. Don't feel like I've got it all figured out, but I hope you can recognize that. I mentioned this again when I started with this webinar I'm talking about, that this had potential to be significant. That if you read enough about the evolving history of this financial crisis, specifically the sovereign debt crisis in Europe, you just get some sense that this could be important. This could be an important day. And if a certain decision is made and you see the corresponding market reaction during today's Asian session, then by gosh, this bad boy can run. Solomon, that's been a tough thing to do, man. That's been a tough thing to do until today. And I'll tell you why. Everything leading up to today, to generalize more, everything leading up to this week has been more about speculation that Europe will come up with some sort of plan. And so what's happened with the euro over the past several weeks is that as we get one comment from a Eurozone official here, or somebody else make another comment, or as we've seen these different comments, these different news developments out of Europe ebb and flow over time, the euro has gone up, down, up, down, up, down. Now, this month more up than down, mind you, but still, the euro has been very, very sensitive of late to news flow out of Europe. So as traders and speculators have adjusted positions, and part of it is maybe the market's a little thinner than it used to be, as a lot of funds, a lot of bigger money to be sidelined here. is waiting for the Europe to come with some sort of clarity, come with some sort of solution. But Solman, I can tell you that there's been no reasonable pattern of late. Maybe it'll get better now, but for most of this month, and you can say this has been also the case. I remember this especially in August, July and August, or especially August. We saw the euro kind of chopping around. I mean, as we got different news flow out of Europe, I mean, the euro could easily be down one day, up the next, or down one session, up the next. We've seen a lot of that. But what's different now? What's different moving forward from now to the past is that we, at least it appears, and I could be wrong about this. I haven't read up about everything regarding what was agreed to regarding the haircut and the other things on the table. There's been some, at least some generalities agreed upon with regards to the EFSF, the rescue fund, and it seemed like the recapitalization plans for Eurozone banks are a little bit vague. But I admit I haven't read about all that yet. I have not really read up on all that, and I should. So that's probably something I'll be tasked with doing later today or tonight my time. But my sense is this, that for now, Europe probably out of the way. Now, I mean, maybe I wouldn't go as far as that. There's still I still see at least one unknown, which is you've got Mario Draghi from Italy coming into the ECB. New ECB president coming in early next week. Trichet, the current president, his 8-year tenure, or is it 7 or 8 year tenure, ends at the end of the month. I kind of wonder how much what the ECB may do with regards to their interest rates. Might the ECB lower rates, especially if we got a new sheriff in town? It seems possible. So that if there's going to be any reason moving forward over the next several weeks or months while the euro would turn south beyond, say, another crisis, maybe a spike in Italian bond yields could return focus back to Europe, specifically on Italy. But beyond that, if the ECB starts sounding more dovish, and that'll be tough one to figure, a little tougher to figure out this first time around, because we haven't seen Mario Draghi in action yet as the ECB president. Now, he's made some speeches before, and some investors and analysts and economists and traders can glean some sense of his style there. But it's sort of an unknown right now as to what Draghi might do, what the ECB might do. So I suspect there's going to be a lot of attention, at least more attention than normal, on the ECB next week. Their next rate decision and ECB press conference coming up next Thursday. But I mean, for now, barring any surprise from the ECB, I mean, it's like this phase of the European sovereign debt crisis is past. Now, again, do I think it's over? No. Do I think they've done enough? No. But they've probably done just enough. We talked about this yesterday or the day before. The Europeans have probably done just enough to calm the markets. Solman, you know what? All of tomorrow. Let me go back to my euro charts here. All of tomorrow could be either a pullback, or we could see what's called consolidation. More limited volatility, sort of range bound, maybe a slightly a small channel heading downwards. I wouldn't. I see, and I have this. I have this tendency too, and I got to fight it. There's a tendency to, once you see a big move. There's a tendency to be overly eager to trade or get overly aggressive with trades. My point is this, folks. I bet the trade of the week is probably behind us. I can tell you that right now. The trade of the week likely behind us. What you're probably left with tomorrow is relative scraps compared to what happened today. Marius, you know what? I totally agree. That is a possibility. They might wait a bit, but one of the things that I would guess that's been holding the Ministry of Finance back is, waiting for some clarity, some resolution, at least some sort of plan from the Europeans. They have that now. At least the clarity part, a little more clarity out of Europe right now. So, yeah, that's a possibility. Intervention. In fact, the new finance minister in Japan just made some comments during today's Asian session. And let me see if I can find those. And this now constitutes our look ahead tomorrow. Thank you, Solomon, for the prompt with regards to what could be next for the euro, and also the comment about the intervention. I'm looking here. Hang on. I will say this: the Bank of Japan just had a meeting, but they're not the ones that primarily drive intervention. That comes from the Ministry of Finance. Okay, yeah, the finance minister said. Before today's Asian session opened, this would have been, 18 hours ago my time, 19 hours ago my time, or not, I think actually 19 hours ago any time. Japan's finance minister says that, reiterates that Forex moves are clearly speculative from the European situation. The finance minister said that we'll take decisive action if needed. We'll take decisive action if needed. Well, so the question is it needed? Well, let's look at a 4-hour chart for the dollar yen. Dollar yen just today made a fresh new all-time low, and this has been the guide for intervention. And the recent trend has certainly not been friendly. Been more down than up. Now, what I've seen more often than not is intervention comes after two things. It's not so much price level geared, although these levels certainly can't be very encouraging to Japanese officials. It's not so much price level that I sense the Japanese targeting. It's much as when volatility increases on the dollar yen, that brings up some concerns and prompts at times a move towards intervention. And secondly, in terms of setting up an intervention move, an actual intervention, that usually comes after the volatility and after a rise during, say, the day prior or the New York afternoon session prior to the intervention actually occurs. So, for example, we can go to a daily chart here and I'll show you what I mean. The last intervention, looking on the left-hand side of this daily chart, Japan didn't intervene when the dollar yen was down around 76 in mid-March. They intervened later the next day. They intervened, if you see my cursor, they intervened like here. Or actually, correction, they intervened here. So they didn't intervene when the yen was rip-roaring strong. By the way, that move down was a response to what the earthquake and tsunami earlier this year in Japan. Yeah, but so they didn't intervene when the yen was rip-roaring strong. They intervened after the dollar yen had at least some momentum to the upside. Now, I would say this. Have we seen the volatility lately? Have we seen the kind of volatility lately that was seen earlier this year? No. The recent volatility over the past several days, but it was nothing, absolutely nothing like what we saw in March. But the reference to decisive action by the finance minister in Japan, that, if anything, is a clue. I talked about this last August this happened before the intervention in mid-September. In last August, we were talking at FX Bootcamp about how Japanese officials like to use the term decisive. They don't say that in English, but whatever the equivalent is in Japanese, maybe some of you may know. Japanese officials like to use the term decisive in reference to action before they actually do something. So it's a clue. It's a clue that Japan, if anything, is poised to intervene. And also, it's worth noting that just in the past few weeks, I forget exactly when, but just in the past few weeks, Japan actually increased its budget for interventions. So, I mean, time is ripe. Now, again, my only hesitation is, maybe the volatility hasn't been high enough for Japan to intervene, but, with at least some clarity on Europe, and Europe's at least made some move, and the dollar yen has been persistently persistently lingering around in the 76 area, maybe the time is right for Japan to intervene. So that's a possibility. Intervention times, as I recall, of the past two major interventions, the one in September. When was that? Intervention in September, that occurred at about 10 p.m. New York time. That would be a little more than 8 hours from now. Now, again, don't assume that just because Japan intervened at a certain time in the recent past, that doesn't mean they're going to do the same thing again. But just to give you some history here, Japan, as I recall, intervened right around 10 p.m. New York time on, which was it, September 14th to 15th. The recent coordinated multiple central bank intervention, which occurred in March, that hit at about roughly 8 p.m. New York time, which would be a little more than 6 hours from now. Now, again, not exactly at the top of those hours, but it around that time frame. So you can generalize from that and say in the first 3 hours of the Asian session, if and when they intervene, that's usually when they do it. Euro just made a new high for the day. Very possible, especially if we see continued risk-on mood in U.S. financial markets. The euro could drift even higher. And that's a word of warning for any of you trying to pick a top here on the euro. Just would not recommend it. Would not recommend it. Oh, did I mention the trend line on the euro? Ooh, I haven't mentioned this yet. We've got some overshoot of it, but let me find this trend line. Where is it? Going to a different set of euro charts here. Yeah, here it is. Let's go to a weekly chart so you can get a better grasp of it. I've got a thick black trend line on this weekly chart connecting the June of last year low. So the low established in June of last year and the low established in January of this year. So June low of last year's June low, this year's January low. Connect those two with the trend line, extend that trend line forward in time, and you could argue we're a little bit above it, but we are in the ballpark of that. Now that trend line, and that's not a sole reason to be just jump head first into a short. But it wouldn't surprise me if sometime over the course of the New York afternoon we found that the euro finally drifts down, if nothing else, due to respect for that trend line. And of course, we're in the vicinity of 1.42 psychological level, but let's face it, the psychological level hasn't meant much yet. I mean, we've been above 140, 141. That hasn't put a stop to the euro just yet. But the trend line and time of day, the European trading day is over here. That could do it. Fiber, you call them vector lines. Yeah, those come into play at times as well. Like the red one I'm drawing here, for example. I mean, we broke above that today, but it's been a factor in the past, or lines like that have been a factor in the past. Yeah, I recommend you use them. If anything, they're nice complements to trade plans. Anyway, folks, have a great day. Good luck tomorrow. I don't recall if there's any, if there's any major U.S. news, and I kind of doubt there is. We've seen it so often in the recent weeks that market hasn't paid much attention to U.S. news. Now, I will tell you this. I'll end with this note. There's a decent chance the market's going to pick something new to focus on. So I for one, are going to be on the watch for, what's the market going to focus on next. Now, we may not be done with Europe. There's the ECB meeting next week and such, but over time, over the coming days and weeks, maybe the focus shifts to something like the health of the U.S. economy or maybe China. So keep that in mind. Folks, have a great day. Cheers.